Did you ever see an important economic news release hit the market, then watch the market explode or implode and regret not being able to profit in this massive opportunity? Well, in this video, you'll learn 10 key principles and strategies to trade an economic news release like the pros on our proprietary trading desk in New York City. Take out your notebook and pen for a video jam-packed with learning for you. You will learn 10 key principles and strategies to trade an economic news release like the pros on our desk in this video, such as game planning for the important economic news release, stock selection for the important news releases, the breaking news trade, using technology to trade more during these opportunities, the trend trade, taking profits as a day trader, make the big days bigger. There's an edge in how you express your trade, namely when to use options over stock, risk management during these huge trading days, and the trade review of this major opportunity. Two profitable traders from our proprietary trading firm in New York City will reveal how this is done with an in-depth video review of a CPI number release, feedback on the most important trading principles and strategies from the reviews from me, and a conversation with these traders on these key points. This will leave you better prepared to profit during the next important economic news release, whether that's an FOMC meeting, a jobs number release, CPI, PPI, or other important economic news releases. Dylan and Brian, thank you for joining us here today and sharing your trade review with us. Let's review it together and start the learning.
So we wanted to do a quick review of the trades from today. Obviously, it was really long, but hopefully we're not too fried for this. But we thought it would be good to do it while we were still fresh and update you guys on how the plan went and how we adjusted based on how aggressive the scenarios were that played out. So obviously in the morning, we had sent over our plan and we were talking with the team. And Dr. S brought up a great point to look at the 2-year treasury.
Let's talk about principle number one, which is game planning. And so one of the first things you need to do to be able to actually trade an economic news release well is before it, you've got a game plan. You've got a game plan what you're going to trade. You've got a game plan what you're going to do if the number comes in better than expected, worse than expected, in line. You want to think about how much risk you're going to take on if the number comes in better than expected, worse than expected, or in line. And that's what these guys went through. And so, Brian and Dylan, if you could just walk through how you actually game planned for this economic release, what the process was for that, and what your takeaways from that were.
Yeah, sure. I can start us off. So for us, when we look into like CPI or we think like big macro data that people are positioned for, because like it's all set on a specific date, like we'll look back on everything over the past year and we'll start reading like expectations. The firm like provides really good resources in terms of like research emails. And so we'll read through all of those and then read through the ones that were of those specific dates. So if I wanted to look back in October, I put in the date October, look through, okay, what were expectations going into it? What were reactions? And then like, what was follow through, and kind of do that for every single one. Then look into like how we perceive funds to be positioned, like what would be considered a surprise, what would catch people off sides, and how would that play out? Once that plan's kind of laid out, we just go through, okay, what numbers would correlate to what reaction, and what trades do we have at our disposal that we feel like we can really take advantage of, and what are the ones that are like scariest or could have the highest risk that we can avoid, and then we'll build situations based off like release date correlates to like our plan. So it's like scenario equals outcome, and it's kind of like a tree that expands out.
All right. So just in short, We're game planning for, so CPI on this day was expected to come in around 7.9%, correct?
Correct.
Yeah.
So we're basically game planning if CPI comes in at 7.7, we want to get really long. Fair?
True. Yeah.
If CPI comes in at 7.8 or 7.9, we want to get long, but maybe not as long. Fair?
Sure. Yeah. I think 7.7, 7.8 would have been around the same. 7.9 would have been a different story.
Okay. And I would disagree with that, but that's okay on the 7.9 one, but that's fine. And that's why we game plan. 8.2, if it came in at 8.2, that's not good. We want to get short.
Yeah.
And then if we came in at 8.4, we want to get short. And we were expecting actually the market to go down maybe 5-6% if the CPI came in around there. So we're laying out the different possibilities for how the CPI print can come in and what we're going to do. And then inside of that, we're actually deciding, okay, so let's say it comes in at 7.6 or 7.7. That's a good number for the market. We want to get long. Well, what do we want to get long? How do we want to express that trade? And we're going to game plan what we're going to buy. And to get long, what did you guys game plan to buy?
Yeah, so in our game plan of picking actual assets, it was mainly around liquidity, given that this event release is 8:30 a.m., 1 hour before the market opens. We're paying really close attention to correlation and liquidity as being the two main variables. And so within that, we chose some of the main high betas. We decided to pick a little bit wider of a basket because at that point in the morning, relative strength is very hard to pick out when all the names are pretty much moving in the same legs. But by the open and by the morning session, it becomes abundantly clear which one of the high betas are the strongest versus the weakest. So we ended up picking Tesla, Meta, Amazon, and Qs.
All right, so we're thinking about where we're going to get long, where we're going to get short, where we're not going to do anything in our game plan. We're thinking about what we're going to buy, what we're going to short in our game plan. And then we need to also be thinking about risk. So if it comes in at 7.7, how much we're going to risk? If it comes in at 7.9, how much we're going to risk? 8.2, how much we're going to risk? 8.4. We're game planning. We're warming up, we're preparing. All right, and then we're deciding what we're going to trade. All right, let's roll the tape. If you want to learn 3 real-world setups that our professional traders use, including the simple but highly effective setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free online trading workshop that we're currently running. This is a 100% free, intensive workshop where you're going to learn more in a couple of hours than from years of online education. So don't miss it.
This is because August 10th, when CPI beat, right, the treasurers reacted really negatively. Like, even though we spiked and we continued higher in markets all day long, the 2-year treasuries faded. And shortly after, a few days later, the rally stopped and we rolled over. And this led to a pretty significant downturn over the succeeding few months. And so because of that, we were watching this really closely. And obviously, when the reaction came, super bullish, we decided not to take the print by itself. We waited for the news to hit, talked to some guys about it. And honestly, I think that's an adjustment we can make where we see the opening momentum. You could feel like 268, 270 very easily on the long side. And then from there, put on size when you actually know what the news is. I know a lot of guys found success doing something of the sort. And so we got long 271, realized the fill was pretty bad, and this was the upper end of our targets, despite how bullish the news might be. And so we took off some into like 272 to 273, pay for it. And then when 272 firmed up, we rebought all of it. And realizing how big this news was and how big of a shift this could be, we decided to buy a basket. We bought Meta, we bought Amazon, we bought Tesla, all with the idea of we need to identify what market leaders are truly going to be, or market participants are truly going to be buying. And we felt that like buying things with the highest beta just made the most sense in this situation. Incredibly liquid, easy to get in and out, easy to fill, and follow through would just be clear because volume should be immense if it's there.
Let's take a moment here and talk about the breaking news trade. So the second key principle that I want to highlight from your review is a trading edge. So there's trading edge and what we call the breaking news trade. And the breaking news trade is once the CPI number hits, you immediately react. And in this case, the CPI number was really good for the market. It came in lower than expected, which meant that the market was going to interpret this as a good data point for inflation. All right, this was a data point that inflation was getting a little bit better. And only one data point, but still a data point. And the breaking news trade is to get long right away on that CPI print number, making a breaking news trade. And you guys mentioned that you can do better at this, you can make more on this, and that's a whole source of edge. So we're going to game plan for an economic news release, and then we're going to have this breaking news trade as a way to actually make some money. And then you guys talked about the basket and buying a basket. And am I right in assuming that when you were buying the basket, you were buying this for a trend trade? Or am I wrong in assuming that?
Definitely. It was kind of both. It was the idea that we would first gauge initial momentum. We knew like immediately we were filling within like a minute of the news hitting. So we knew like there was no way that everyone that needed to buy was already long. So we were taking off a lot of legs into the front side as well.
Okay. So a subset of a breaking news trade, which is not right on the number, but observing strength and then getting long strength after observing price action. Fair?
100% fair.
Okay. So you're doing that. And then you decide to do that by buying a basket of high beta stocks, correct?
Correct.
Okay. So let's talk about this. Why the high beta stocks and how do you feel about that?
Yeah. So the reason we picked these names was the idea that we wanted to almost guarantee beta as best we could. And having the most liquid instruments, having the market leaders that everyone was watching. And if portfolios that we believed were sitting cash that needed to get in, like this would be the first names they hit. We also felt like a lot of these were incredibly beaten down. So it made sense that if portfolios were going to kind of reverse their recessionary trades and start putting on long exposure in equities, that it would begin in a lot of these instruments that have just been absolutely slaughtered over the last 6 months, a year.
And the other main reason being this was the aggressive scenario that played out, but we planned other 3 scenarios, and a neutral scenario and slightly bearish scenario. It's a lot harder to capture in the individual names because the beta may not be there if the reaction isn't extreme in the market like it was this time.
Okay, 2 thoughts on, so when you decide, hey, I want to get long the market after an economic news release, the first thing you do, if we were to teach you and you guys were new traders, if you were interns, we would say, express the trade long by buying SPY, Qs, IWM, or volatility product. That's how we would teach you at the beginning. First step, trade the market indexes. And then the second step after you have some success trading those market indexes is to say, well, maybe you want to trade a high beta name that will give you a little bit more juice above the market indexes. So maybe some of the high beta names, maybe the Metas, the Teslas, the Netflix, whatever the high beta names are at the time, the Googles, the Amazons, are going to go up more than the market indexes. Maybe you want to focus on, maybe you think Apple is going to go up more than SPY or Qs, and you focus on that. Maybe it's at a better price. And that's sort of the second iteration of getting good at playing an economic news release. All right, so you're going to start with the indexes. When you get a little bit more sophisticated, you may be choosing a high beta name. And then the next step is something that Lance talks about, which is looking for even a better opportunity than indexes or high beta names. Something that's really, really beaten down or something that's going to go up more than the marketplace on this particular day. It turned out that the growth stocks were the best performing stocks on this particular day. It turns out that buying Shopify, the Rokus of the world, the ARKs of the world, really outperformed the individual indices, really outperformed some of the other high beta names. They'd been beaten down a lot. When inflation starts to temper, those stocks are going to catch a bid more than others because that means that they're going to do better in an environment like that. And then the other stock that a lot of people on the desk started trading was Tesla because it had been beaten down a lot. And so that actually didn't work out that well, Tesla, or didn't work out as well as maybe the growth names. But the third iteration of how you actually express this trade is looking even more specifically at making the most out of your particular day. And so thoughts on maybe trading some growth stocks, or maybe next time trading a beaten down name that can go up even more than the indices or a high beta name?
Yeah, that's a completely fair argument. I think for us, it was two components that made us lean to leaders. One was liquidity, and the guaranteed beta Dylan was talking about. And then the other component was that optionality was there on the market leaders that we were unsure of if you would get the same amount of liquidity on the options end. That just allows us to make more adjustments to positions quicker. Say like if we squeeze right at open and we run an ATR in the leaders, we could box the trade and then like from there stay in a core position with a great average. But I think it's completely fair to say like we could have looked growth. One of our team members, Carlton, brought it up, I believe Friday morning, and we ended up taking decently sizable positions in Shopify for the day 2 leg. But yeah, I think it's definitely fair to realize the strength after the initial move.
Okay, so the first principle is game planning. The second principle is the strategy, the breaking news trade. Third principle is what you should trade. All right, so that's a summary of how we think through that. The fourth principle I want to talk about is using technology, and you talked about making a basket trade. Now, I'm going to assume that what you meant by buying a basket of stocks is that you manually started buying a basket of stocks. Am I correct?
Yep.
Yes.
Okay, so I want to give you a challenge for you guys to think about. Next time, I want you to think about actually building a basket with technology where you can automatically hit a buy button and enter in with some risk. Now, I don't want you to do this with a ton of money because I want you to experiment with this. But I want you to think about, hey, if you were going to buy Meta and Amazon and Google and AMD on a day like today to express your long, I want you to be thinking about building a basket where when that economic news release hits and it's favorable for the marketplace, you hit a button and that button gets you into all 4 stocks. Now, you don't have to pay the offer to get into all 4 of those stocks. You can TWAP in. There's different ways to execute in. But I want you to think about when you use the term basket, thinking of it as using our technology. All right, and so you can do that with our technology where you can, when you got long, when you wanted to get long, you literally could have built a basket to short SQQQ, get long SPY, get long Q, get long Apple, get long Amazon, get long AMD, get long Shop, get long Roku, get long ARK. You could have paid the offer to get into all of them. You could have TWAP'd into all of them. But I want you to be thinking about that as a potential strategy. And in a situation like this, you really do just want to get in. It's not going to happen a lot where you just want to push a button and get in. But I think you should be thinking about this. I think your team should be thinking about this on days like this. Thoughts?
Yeah, I think that's a good idea. I think on these events, that would make it easier to execute. One one of the nice things about having me and Brian here is we're able to execute on a few names at the same time, and on 2 accounts. But I think that would make it easier for both of us managing a single account each.
Yeah, and the basket will literally say, like, let's put $1 million to work or $2 million to work. I mean, we'll start small. Let me put $1 million to work. Let me risk X. I hit the button. I'm in. Start filling, and you'll be able to do more and make more money in special situations. All right, let's keep going.
Throughout the moves, we just kept making sure to pay ourselves into extensions higher. By the time the open came around, we were in 60% of most positions or less, just giving us workaround of like if dips were to come or like different permutations were to come, things were to reverse, the 2 years started to turn. Like we wanted to make sure we were in a position that no matter what, we were locking in like 5 figures plus, and with the ability to risk and add way more on different permutations. Dylan, do you want to go into what we did at the open and also what we brought in long volatility wise going into the open?
Yeah, so I can start with the long volatility into the open. So our plan, like Brian mentioned, was we outlined it and sent it over to our team. And into that, we didn't want to be directionally biased going into this event. We never know what the data is going to come into, but we wanted to be long volatility. They were pricing the at the money straddle around just under $8. So it wasn't an amazing deal or anything, but we thought that we could get some follow through into today.
There's 2 types of edge. There's I should get long on the CPI print because it's a really favorable print and it's likely to trend for the day and maybe even 2 days based on this news catalyst, which is what we're talking about. And so if you were to just get long, you would make money. That's edge. That's one type of edge. If I do this 10 times, I'd make money. A couple of times I'd lose. A lot of times I'd win. Sometimes I'd break even. I'd make money. Getting long with a good CPI print, I'm going to make money. That's edge. The second part of edge is actually how you express that trade. So you can just get long certain products, or you can, through the expression of your trade, gain some edge. And that's what you guys are doing. You're actually making more because of the way that you're structuring your options with this particular news catalyst. You're making more money getting long by how you're actually structuring this trade. And so that's something that's a little bit more of an advanced topic. But that's something for people to aspire to. You know, traders at prop firms don't just get long stocks. Well, they also buy calls, and they don't just get long calls. They find lots of different ways to find edge with options. And that's what you guys are doing here. Let's just skip through. Let's keep going.
Mm-hmm. I think you could be holding more to closer to expiration once you do have the directional follow through. That's something we're going to test out. Just realizing we're not making as much on the purely long vol trades. And so that's something I'll monitor for going forward and for the rest of this trade to see if pricing changes that much into Friday. But for the current positions that we were running, we were cycling, like Brian said, we were trying to rotate risk. That way, at no point we were too risk on, and we didn't feel like we had the room if it pulled in too much. It shouldn't have been, too uncomfortable, so it was very important here that we don't take too much heat. And I feel like that was what we did really well. The one trade that kind of came back closer to our average during pre-market was Tesla. And as soon as it did, we recognized this, immediately sold it into the first bounce. And from there, it was that was the point of putting on the basket, right? We want to see we don't know what leaders at that point are going to get bought. Tesla was extended the most to the downside. So pre-market had the best risk reward, but off the open, it was the only one being sold on volume, the only market leader. And so that was really notable. So we switched to what else can we trade? Immediately, we said we should be adding back Amazon. Amazon had a bid, and we've spoken with Carlton and Team Swang pre-market. And we really liked this one because Amazon was also connected to SPY as consumer discretionary. And we saw that SPY was relatively strong relative to tech during pre-market. And early in the session. And so here we added back some Amazon, and we also flipped into Amazon options. At that point, we were looking through the option chain, and we realized that Amazon calls were pretty underpriced for this Friday. Amazon 95 calls, this is before it took out the high in the morning, about 15 minutes off the open. 95 calls trading at 60 cents, 60 to 70 cents. Amazon, even at these prices, has an ATR of 5 points. So that essentially means if Amazon falls through an ATR and the market has any kind of follow through buying today after that CPI print, these calls will go in the money. And at this point, we actually also sold 40% of the calls. The calls I was able to bid into around here for 60 cents, and up here they were worth well over $3. And so at that point, on a risk reward basis, it made sense to just kind of pay for the entire trade in one sale. And then the equity is just additional profit, and we're riding the remaining calls into tomorrow. And so that's,
If I can jump in there real quick.
Yeah, go for it.
So when Amazon, like Dylan said, we weren't expecting to be paid so quickly, right? And I remember Carlton telling it like everyone like, okay, this is huge. We need to be holding. And we felt like that was exactly right. Like we definitely need to be holding. Like there's a good chance market closes at a highs. And there's no way if long portfolios haven't gotten in yet, right? Like 60-40 portfolios that had to go to cash, like all these guys like weren't able to participate. There's no way in 30 minutes they fill all the positions they need to fill, right? Like that's just pretty much impossible. And so knowing that we were most likely to see follow through, we wanted to make the hold. However, when we get an expansion like this, right, so aggressively, we felt like it just makes sense as intraday traders to take advantage of our skill set to continually sell, right? And so we were selling equity 97, 98. And at 98, we began even selling our calls. We got down to 60% of the position in calls, and the conversation began then. Yeah, exactly. Like, okay, we want to hold our position, but there's a spot for us to take advantage of an exhaustion, right? I even told the team then, I was like, honestly, Amazon looks like a short. And understanding that, realizing this is a spot where we can box a portion of our trade. If we think that in the short term, like price is going to be coming down and we're delta long like 4,000 shares. Honestly, we could have perfectly boxed it. And I think moving forward, like that's the move to make. But I just shorted 2,000 shares really quickly against the high. And we just rode the position lower as a way of cash flowing the moves in between the big moves we want to hold for.
That's an excellent example of you guys using your day trading skills to take profits even during a trend day. That's an excellent job of you guys coming up with a strategy to take profits into extensions, over extensions, taking some profits and using that as a excellent best practice when you're trading a day like today. Take those profits into spikes, book some profits, and keep going.
100%. Thank you, Bill.
Appreciate it. Yep, that's a really good addition. That adjustment you made is just a way of capitalizing on more of the short term while not taking heat on or any kind of give back on the longer term idea.
You talked about how Carlton and you guys were talking about how we don't want to take profits off of our core positions because of the day we're in. And so the other trade strategy that's inside this day is what we call a trend day. There's going to be certain days where there's a high likelihood that we're going to finish at the high of the day for the entire market. And we call that a trend day. We've got a super important news catalyst behind us. The market's most interested about inflation. We've got a number that shows us that inflation may be getting a little bit better. That may signal that the Fed will be less aggressive in their rate hikes. This is excellent news. This is a 10 out of 10 news catalyst. So when the market is above its opening range, when we're above all of our VWAPs in all of our indices, and we're showing breadth with our ADD line, and we're seeing really strong tick readings we're going to conclude that that's a trend day. And that's a whole nother video. We get a video series on trend days. But it's a trend day, and we want to play for that. And so you guys are setting up your trades based on this being a trend day. And that in of itself is an important thing to recognize what you guys did, and you adjusted your trading accordingly. So we're playing for a trend day, playing for high of the day for our core positions. Okay, moving on.
When we're thinking about what Brian said, big money managers needing to get into these positions, Amazon, we noticed, had a really big bid, and we understand how they get into these positions. They're looking for liquidity pockets, and they know the morning and the close those are the two strong liquidity pockets for the day. So we noticed the relative strength in Amazon during the morning, and we were very, very keen on watching what else was really strong. We noticed semis had quite a bit in them, but we had missed the morning move, and so we were just very, very watching the leaders closely, just because any of those leaders could have started having a bid during the day and into the close. And so Apple, we noticed, holding up really well. So we just bought that and scalped out some more risk intraday and sold the rest on the close. And this one.
Yep.
And then for the overnights, we took some Qs and we started a bunch of the continuation trades from our earnings by picking some of the stronger names relative to the market.
One thing I want to touch on real quick is like highlighting back to our points of like, all right, if we were to look at today objectively and go, what do we do really well and what can we do better? I think things where we've really improved is the communication of like pushing for more, right? Like we took the scalp, and Bella mentioned this, and I think it highlighted like what exactly we were doing and what we needed to be doing to really capitalize on today. Like into the pre-market, we were only up maybe like, or into the open, we were only up maybe like 10,000, 15,000. Like it was really like, okay, like it's a fine trade, but in the reality, right, for how big this could have been and this was, like, that's nothing. And so we were pushing like, okay, where else can we find like pockets of opportunity? We were pushing that with the team. We were looking, and that's how we found those Amazon calls to begin with. That's how we moved to Apple later. I think those are just really key concepts of like, okay, if this is such a big event, like where else is there money? And every second counts. I know Lance brought that up too, of like, it's whoever can think of it faster, whoever can think of it faster, whoever has it planned, and pulls the trigger gets the best prices. And I think we were very, I guess, successful in that kind of mapping. And we also were always preparing for worst case permutations. Like we're like, what if Qs pulls in 50%? What if this whole thing reverses? And we felt like we were never off sides with it. And I think in pockets of high volatility or events that especially are incredibly hard to plan for, it's very easy to get overzealous in the longs. And I think 6 months ago, we definitely would have, and probably one of these positions would have not worked and we'd have lost like 10, 15K for no reason. And so I'm very happy with that development of things.
I want to talk about firm resources. So I want to set the stage for people that are listening. You have research that helps you to determine what to do when the CPI print comes in, that adds value. On this day, we were lucky enough to have Dr. Steenbarger give his insight into what he thought the markets could do during the 11 o'clock meeting. And Dr. Steenbarger talking about how this could be a trend day, and how Dr. Steenbarger was talking about how this could be, in the short term, a game changer for the marketplace, because this number was important in terms of inflation. And then, as you mentioned, Carlton, our floor manager, is encouraging you guys to recognize this as a trend day, another resource at the firm. Lance is here on that day as well, talking about stock selection and opportunity. And then I was talking about how midday that, all right, we were up millions of dollars. Don't tell anyone that. We were up millions of dollars by 11 o'clock in the morning. And based on my experience running this firm, and seeing us have really, really big days, we were just getting started. And I think sometimes people take their foot off the gas and they're like, oh, I'm up a ton of money because I caught the breaking news trade. And then they don't tack on an extra 50%, maybe even an extra 100% from where they're at in the morning onto these days. You want to make the big days bigger. And that was the point I was hoping to impart to you guys, which is good that you're up a bunch by 11 o'clock, but you can do better. Good that you've caught a little bit of this breaking news trade, but there's so much more opportunity to come. And what you guys did super well is find some of the easy money trades to tack on to a solid open to build it into an even better day. These days, we want to make even more. And so I love how you guys were focused and kept your gas on the pedal and made more on top of more.
But we never down more than like $1. Like if we're even down $1, like and I think that just speaks to when these macro trades are there. And Bella mentioned this, like you don't even need to draw down. Like if the momentum is really there, there's no need to draw down. And I'm really happy that we were able to pull that one off.
I think that's a really important observation you guys make about risk, which is on the best days, you don't have to draw down much. When you're right, you're going to be right away. And that observation is important because it'll allow you going forward to trade even bigger. If you're not going to actually draw down much and you're going to be right away, then you know you can get in real big. If it doesn't work, you get out. But you'd be kind of tight with that stop, can't you? After a CPI print or after the trend starts to develop. That allows you to get even bigger next time and maybe pull out another 20%. Because of that super solid observation that you guys made. So last point, one of the things I'd love for you guys to tack on to this review, and I love that you guys put this together. Thank you so much for doing it. There's a lot to learn from here. And I love the way that guys are using these video reviews to share their best trades and their best days with each other. One of the things that I want you guys thinking about is specifically where and how you could have made more. So having a part of this review where you're going and you're saying, you know what, I could have been twice as big here, and my stop would have been here, and my target would have been here, and I still would have been inside my guardrails, my risk guardrails, and I could have made a little bit more. Here's where I could have put on even more risk. Here's where my entry would have been. Here's the stock it would have been in. Here's the time of the day where I would have entered. Here's where my stop would have been. Here's where my target would have been. Specific. And that idea is when we're doing well and we're having fun, then we want to build from that. And the way we build from that is specific reviews. Be hard on ourselves to do even better on our best days. Does that make sense?
Yeah,
For sure.
Mm-hmm.
That's good. And I think this was a PR for you guys.
Yeah. This was a PR.
That's what I like to hear. Congratulations.
Thank you, Bella.
Thank you, Bella.
That's good stuff. And I know that you guys don't think this is going to be the PR for your career, correct?
I know it won't be.
Definitely not.
Yeah, that's great. That's awesome. That's really great. These are not the easiest trades to make. This is hard trading. There's not a lot of people who can make money, really good money, on days like this, particularly towards the beginning of your career, like you guys did. So that's really awesome to see. Okay, to summarize, in this video, you learned 10 key principles and strategies to trade an economic news release like professional traders do on our desk, such as game planning for the important economic news release, stock selection for the important news releases, the breaking news trade, using technology to make more, the trend trade, taking profits as a day trader. Make the big days bigger. There's an edge in how you express your trade, namely how to use options over stocks. risk management during these huge trading days, and finally, the trade review. From all of us at SMB, trade and train well. So now you've learned 10 key principles and strategies to trade an economic news release. However, there's another important aspect to trading profitably that we didn't cover in this video that we do in the video Trade Execution Rules, the secrets of order types appearing on your screen now. Just click it to watch.